Welcome to Morningstar. I'm Holly Black. With me is Julian Cook of T. Rowe Price. Hello.
Hello, Holly. How are you?
I'm good. I mean, when we set up this meeting, I had hoped we would know who the next US president was by this point. But if 2020 has taught us anything, it's that you can't predict anything in the markets. Julian, where are we at the moment?
So I guess where we are right now is I think it's becoming more likely that we're going to get a Biden president and a Senate which is going to go to the Republicans, or remain with the Republicans. And I think on that basis, I guess it's not quite what we would have, I guess, expected running into this. But it seems to be, I guess, the most likely scenario is one of a divided government. So let's not worry so much about whether it's Biden or Trump. But in terms of, I guess, being a divided, Congress and White House.
So what does that mean for investors? A divided government in the US, it's typically said they can't make such radical policy changes. So that could presumably mean less volatility once things are actually decided.
Yeah, I think it's an interesting dynamic that's been set up right now. I think there was certain expectations running into this, which are obviously not going to be fulfilled, and whether that's related to taxation policy or fiscal policy. I think it's pretty fair to say that there's going to be more checks and balances, and so the Democrats aren't going to get it all their own way. So I think one of the big things out there was going to be the relief and the recovery stimulus packages that would be put together, and in total those are thought to be in excess of like $3 trillion. So that was the hope and ambition, and I think everybody's got to get used to the idea of that hope and ambition getting scaled back to some degree. And I guess in terms of tax changes, even as this election process continued, so you sort of got the feeling that the Democrats were kind of dialing back on the amount of tax increases that they were looking to sort of repeal from the tax cuts that Trump put through in his administration. So I think it's actually a little bit more moderate in terms of changes that are going on in terms of taxation and fiscal policy.
Are there any obvious winner or loser sectors in the event that we get this split government?
Yeah, I mean, in terms of the market environment, we still think it's a low growth, low inflation, low interest rate environment, and that is conducive obviously to secular growth type companies. And in terms of, I guess, specifically on a sector, one of the sectors that did really well yesterday was healthcare, and I guess that's on the growing expectation that like the expansion in Obamacare, which would have been obviously high on the priority list of Biden, is looking less likely. And so yesterday you saw a tremendous recovery in some of those health insurance companies as also a direct consequence of it being a more moderate type environment, and sort of not necessarily changing the delivery systems of healthcare. So you saw actually that happen in the market yesterday. And those stocks have been under pressure for quite a while, so it's nice to see that kind of relief happening.
And at this point, with the results still to come and potentially a few more days of uncertainty, what's your overarching message to investors?
I think we have to be cognizant that growth. I'm like the U.S. growth guy. The tip of the spear, I guess, is what's happened on a year-to-date basis. Growth is up like 27%. And value is like down 9%. We have to recognize that's a huge disparity in performance. And a lot of that improvement, most recently in growth, has come as a consequence of valuation expansion as opposed to fundamentals dramatically improving. So I think we have to try and balance out what we really think are kind of the proper risk reward stocks from here to be exposed to, and not get too sort of sucked in by those companies which have reached extreme levels of valuation. I think for us, we're as defensively positioned as we can be, but still maintaining that growth bias, growth in excess of the benchmark. So I think you have to pick your spots, and you have to really try and find those ideas which represent really good risk reward from here, and not just like ride the momentum of very, very expensive, highly charged stocks.
Julian, thank you so much for your time. For Morningstar, I'm Holly Black.